of their press conference details. Let's look and see what reactions we're seeing in the market. Also, I want to bring up a few points from the Hood earnings that we saw yesterday after the close and how Hood has opened and what's going on there. So let's dive right on in. Let me show my screen here for a moment and let us discuss. Okay, here we have, I've just got this chart up for, this is always an interesting one to keep an eye on, 10-year yields. We want to keep watch of that. But if we just go kind of real basic here and see what SPY is looking like ahead of, or just after some of the interest rate news and kind of how that's shaking out. Let's have a little peek there. Here we go. Just one moment. Okay. So we're seeing a little bit of a down day. Not too much. Obviously, there's been a massive recovery. We'll see how that lasts. It's an interesting point to look at. There's always a lot of skepticism of aggressive recoveries and aggressive moves like this. I think when we have aggressive recoveries, it doesn't just tell us that everybody was eager to step on the gas and start buying. It says that a market was artificially held down. We see this happen in stocks constantly. We saw it happen in the S&P. The markets are doing good. Stocks are doing pretty well. The economy seems to be doing pretty well. But there were external factors that were causing a lot of pressure on the market. And as soon as the market kind of felt somewhat confident what might be happening there, took off and ran like crazy. Now, we have a little bit of a pullback. Do downtrends make new highs? Not very much. So is this a continuation of an uptrend? Very likely. One of the reasons I love this yellow line right here. This is just a 200-day average price, and it's so interesting to look at with the S&P because, during our last major interest rate hike, we saw the S&P get below that yellow line for several months, below that 200-day average price. There was definitely some downward pressure there. But it's a pretty rare thing that we see. For the most part, we stay and have stayed for many years above that 200 average price. When we go to larger time frames, the only times we've seen it even really get below that were number one, the bottom of the market on interest rate hikes, a little dip for COVID there, 2008 and 2000, right? So over the last 25 or 30 years, those are the times we saw it get below the long-term average price. Now, likewise, it does get a little extended. It runs a little too far above those areas, and we do get some pullbacks, and we saw that happen right here. Got a nice pullback. I'm not saying the market goes straight up from here. I'm not saying it goes straight down from here, but I'm saying this is a very natural kind of progression and movement that we've seen. And certainly Fed days can exaggerate that, can help that along, and so on. And today what we're seeing is just, probably the market taking a little bit of a breath, right? We saw some big runs up and so on. But we did see, if you look around at headlines and so on, interest rates remain unchanged at 3.75%. And the Fed is still leaning towards more rate cuts. So there's that. There's been this back and forth on what's it going to be, rate hikes or rate cuts. And at least at the moment, we're seeing that we're looking for some of this to not change dramatically. The market is pretty well comfortable with what is happening here. So we see that. Something else that we're seeing is the Fed is getting more and more kind of divided on how they think things should go. There's Fed members that want to see rate hikes. There's Fed members that want to see rate cuts. FOMC members. So these are factors that definitely can concern the market when there's not a fairly consistent unified picture on all this. So we're going to keep an eye on this. Nothing too crazy in the works here. One thing that let's look real quick here at Fed fund rates chart. This is just a nice historical look at interest rates in the U.S. One thing that we're seeing in the headlines: biggest descent since the 90s, since early 90s, which is kind of in this region here, right? Interest rates were coming down. A lot of disagreement among FOMC members of where rates should go. And that was after some pretty aggressive rate cuts from about 10% in the late 80s to an interest rate of about 3% by the early 90s. So some aggressive rate cuts. Fed members were not super on board. Remember, we were coming from the early 80s at like an 18, 19% rate, right? And they were coming down aggressively. Everybody was thinking it was happening too quickly, and so on. And the rest is history. And here we are somewhere kind of in the middle of the last really 30 plus years of some highs in there of 6 and 7%, some lows of obviously near zero. We're kind of right in the middle at this 3.5, 3.75 kind of range. So that's something we'll keep an eye on and we'll watch, and we'll see ultimately how the press conference goes from Powell today. I think this is his last press conference. Does that sound right to everybody? I think it's the last one. So this is the final press conference from Powell. He could stay on as an FOMC member for another 2 years. I think it's kind of traditional that once you step down from the Fed as Fed chairperson, you kind of leave the whole thing. But he could stick around for a couple of years, but he's out as Fed chairman sometime next month, I believe. Okay, so the Fed maintains their stance on things. The market's not moving a ton. We're seeing this kind of action here. Again, S&P's down about 1/3 to 0.5%. It's not a great day. It's not really any kind of a day. It's just kind of hanging in there and not doing much. Headlines from the press conference. Powell says he'll stay at the Fed as governor after his term as Fed chairman ends. So again, it's not super common that they do that, but Powell's sticking around. I don't know what this guy's going to go do otherwise. He doesn't strike me as somebody that enjoys doing other things other than staring at data and making decisions on it. So I don't know. We'll see what happens, but will that impact things a ton? Probably not. Okay, so while we let the press conference continue to kind of play out and make its move there, let's look and see. Let's have a little peek at Hood. We saw Hood's earnings. Hood is currently down 14, almost 14.5% today. And this is an interesting one. We've been talking about Hood a good bit and how it's very, very, Hood is very correlated with the crypto space. Obviously, crypto is a large portion of profits and revenue for Robinhood. And when cryptos go down, people don't trade it as much, right? And so we see that kind of thing happen. And cryptos are certainly not on a major recovery here. Bitcoin still sits, here's our high of about 126 and change. Bitcoin is still around 40% off that high. That's pretty significant. So we need to see some real recovery there for some of these crypto related stocks to really make a decent recovery, most likely. We saw this big bump with day trading restrictions being lifted. Hood jumped a bunch on that and then is kind of just right back down again. So earnings came out. They weren't necessarily super negative. They weren't horribly negative. Looking for 38 cents a share on earnings per share, came out at 38 cents. Revenues are down just a bit. And really the problem with this is the numbers weren't terrible. They need to be good to get a stock like Robinhood running again. And right now they're just not good enough. They're not seeing enough revenue. They're not seeing enough profit there to make this recover and run like I think everybody is wanting and hoping for. So we need to see a little bit of that. Was Hood's run up here to 150, over $150 a share, a little bit on the optimistic, aggressive side, probably, and it's working its way back into kind of what the market at least considers to be a little more fair market value for the company and for the stock. I still love Hood. I think this stock, this company has a lot of great things in the works. I think they've been through some pretty big bumps, and they're kind of the brokerage for the younger generation, the up and coming generation. They offer a lot through this. I actually love this company, and I think there is a lot of great opportunity here. But we need to see some numbers. We need to see some improvement on the underlying financials to make this start running again. We need to see cryptos doing some things. We just need to see that. This reminds me, and I think I may have talked about this before, but it reminds me of SoFi a bit. SoFi had earnings this morning, I believe, before the open. And it's, their earnings were decent, right? I haven't even read through SoFi's earnings, but SoFi, Hood, Bitcoin, all these stocks are very much mirroring each other. They're so correlated right now. And, is crypto going to be the thing that we need to see to start a rally everywhere? Probably. This is kind of a real risk on type trade. And we need to see, that'll probably show up first in the crypto space and then work its way, across some of these fintech stocks. But I think there's opportunity here. I don't trade SoFi much. I don't know if I've really ever traded SoFi. I do trade Hood. I do follow Hood. I watch that stock a fair bit. And I think there's opportunity on all of these, but SoFi is certainly not as much in my wheelhouse, but I think it is worth watching. Between Hood and SoFi, I might lean on focusing more of my time and energy towards Hood. But there are some interesting things to watch between those two charts. And again, we just need to see, we need to get Michael Saylor, evangelizing, or whatever the word is, more for Bitcoin and cryptos. He's out there constantly pushing crypto, pushing why everybody should buy Bitcoin. So if that works, maybe that's the rally. I don't know. We see Strategy, formerly MicroStrategy, doing the same as all the rest of them, which is heading down, down, and down. These guys have earnings in 6 days. Their earnings are never good because they don't make any money. They just buy crypto and they buy Bitcoin and hold. So, huge losses. But we'll see how it goes. We'll see how it shakes out. So there's some stocks out there that have some interesting earnings, and we'll keep an eye on them. We'll see where they go. I would love to hear some of the stocks you guys are watching and looking at, and where things might be headed. But what we need to keep an eye on is kind of the regime that the market is in. We're sitting around highs on the S&P. We need to keep an eye on that. We need to see how, aggressive the VIX is. When volatility goes up, everyone kind of panics and freaks out. Us shorter term traders do tend to like that, but long-term investors don't. So the question I like to ask everybody is: sell in May and go away a thing still, or is it not a thing? I'm saying it's not a thing. I think investors will stay involved through the summer. Certainly the bigger institutions will have some good exposure there, but it's always something I keep in the back of my brain. Is that going to be significant this year or not? And it really hasn't been significant the last couple of years. There's been, there's an uptick in volume in May, but it's not like May's the end and there's no movement moving forward. So that one's worth keeping an eye on. But the VIX, we're watching that. We're certainly watching oil prices and kind of how that's going. And obviously, that's weighing on things. We're back up above $100 on oil futures here. this is certainly weighing on the market. Iran is back and forth and up and down and everywhere, and so that's certainly causing some discomfort in the market. So we got to keep an eye on those three charts pretty regularly. I'd love to hear from you guys what you're trading, what you're watching, what you're looking at. But I think for now, keeping an eye on any surprises the Fed may have, as well as just kind of watching our key charts to see where things are moving and where things are playing out, should be worth keeping an eye on. So I'll leave it at that. Thanks for joining us for a couple of minutes. Just wanted to talk about a few of these things and see how it all shakes out in the market, and we'll see how things go on a Thursday after all the Fed news and after some elevated oil prices. Let's see how this plays. Thanks everybody. Good luck. Leave me some comments. Tell me what you're trading. Let's talk about it on the next live stream and see how it goes. Thanks guys. Take care.